What's going on, guys, and welcome back to another video. So today I thought to do something a bit different and go through how I budget and save my money on a monthly basis when I get paid from a 9 to 5 job. So with all that being said, let's dive right on into today's video. So in my opinion, I think it's extremely important to set out a monthly or weekly budget depending on when you get paid. It's just like if you are running a marathon, you need to kind of set out mini goals the whole way before the marathon to ensure you can complete it. And that's no different, especially if you're saving for the likes of a mortgage or a wedding, etc. Both of which I'm currently doing, so we'll discuss that in today's video as well. But again, it's really important and you don't need to follow it extremely strictly either. You don't need to have it down to the exact cent, just to have a rough idea on a monthly basis what money you want to set aside for what different investing or savings need. Now, just two things as well before we look at my Excel or budget chart. I won't be able to disclose where I work. Now, I do work in the banking sector, but I can't disclose which bank I actually work for obvious reasons. And second of all, I can't actually disclose how much I actually get paid, so we're going to do this in a percentage form. And to be honest, I think that's even better because, for example, if I discuss in euro, the people within the US using USD, or the UK, for example, using GBP, won't kind of be able to grasp exactly how much euro to USD or euro to GBP actually is as such. So I think a universal approach here would be to use percentage form. So firstly, let's have a look at what way I plan on saving money on a monthly basis. Now, this isn't to the exact percentage, but it's a very accurate enough idea of what I actually put away. So let's say my wages denote 100%. For the first 5%, we have 4 here in the form of holiday funds. Now, obviously, I think it's great and much better, just like car expenses such as tax and insurance, to kind of pay it on a quarterly or monthly basis. Well, not even pay it as such, just put it away for when you need to pay it. For example, if your car insurance is up in December, you're better off kind of having 12 mini payments and save that up instead of having one hit in December itself. Same with the likes of car expenses and holidays, and also house fittings. Again, house fittings, when you get a house, you obviously need to fit it out. It's not just the mortgage itself. So even though it's only 5% of my monthly savings here as well, I still think it's extremely important to build this fund up as well. Next two here denote 5 and 8% is my emergency fund and food and petrol. Now, obviously, food and petrol is a must on a monthly basis and even a daily basis. So again, I set aside about 8% of my overall budget or monthly wages set aside for this, and also the emergency fund of 5%. Now, as you can imagine, the emergency fund can have a lot of different needs here. So again, there's no exact kind of need here as such. It's just to have money set aside in case, let's say, just again talking about cars, if you got a flat tire, for example, it would be handy to have money set aside instead of having to dip into any of your other funds. Now, again, emergency funds could go anywhere from a car puncture to medical bills, etc. If you don't have, let's say, health insurance, although I do, but again, just if you don't, it's very important to have an emergency fund because you never know what could happen at the end of the day. The next two then is what the first one here is this channel is all about, and that's investing. Now, about 10% of my monthly wages go in towards investing, mainly to trading 212. We have a few mini different other brokerages as well that I don't really discuss too much on this channel, but trading 212 would be the main one. So again, you know what I do there, dollar cost averaging into all 33 of my holdings. I won't go into detail here because if you've seen any of my prior videos, they're all about that. Then we have about 12% of my wages going to personal needs. Now, that's basically just for my own personal use if I want to buy anything myself. Like, for example, if I wanted to get a new pair of shoes or a new phone, if I wanted to go to a game, etc. Now, obviously, over the last year, I haven't had a chance to buy a lot of things or go out a lot for obvious reasons. But again, I am using as much as I can of that 12% of my personal needs. And again, let's say if we only use 5% of that, well, I'll put away the other 7% at the end of the month into, let's say, investing or other savings needs as well. So I don't have to use that full 12% on a monthly basis. And the bottom three here make up 50% of my overall wages on a monthly basis, and they are rent, wedding, and house/mortgage. Now, thankfully, my rent is only 15% of my overall wages, which I'm very happy with. And it really does mean that I can pump a lot more money into mortgage savings, wedding, investing, etc. We then have my wedding fund. Now, the wedding is next year, so again, we have pretty much all the money for the wedding at the moment. We're just tipping away for anything else. And again, even if we did have over budgeted here, we still have money left over after the wedding that we can just pump into the mortgage or house funds, fittings, emergency funds, etc. So again, it doesn't really matter if you go over budget here. It's probably better, if anything, because you'll have money set aside if something does go wrong or you need to buy more. And if you don't, you have money set aside to put somewhere else at the end of the day. Now again, the final one here is the house and mortgage. We have about 1/5 of my overall wages on a monthly basis going in here. Now again, it kind of goes without saying, the house and mortgage are the same thing, but we already have all of the capital set aside for the mortgage itself. We're kind of just waiting to find the right house that we want now. And then obviously once that's set in stone, we won't be using 20% of our overall monthly wages towards a mortgage because we wouldn't need that much. So again, once we have the house itself, we can start pushing this figure down to probably about 10% between the two of us, and then putting more money into investing and other investment and saving needs. On screen now, we can see all my different savings accounts. Now, obviously, it's just in percentage form, kind of just to keep my own personal stuff behind the scenes as such. So again, we can see the 4 means of investing I have here is in the bank, credit union, post office, and investing accounts. So they're the 4 main parameters that the majority of people use anyway. But again, we can see here, we'll have a very brief look on the left here, what I have in each of these accounts in terms of percentages, and within sub-accounts, what I'm actually saving for. On the left here, we can see all the various accounts that make up the 100% of our overall savings. We have everything from mortgage, house fittings, emergency funds, etc., joint savers, trading 2 and 2, and non-stock investments, which I'll discuss in a different video. I'll keep that for another day. But again, that makes up the full 100% that we can see here on the left. Just like in stocks, you need to do a weekly or monthly audit to see if you're under or overweighted in certain different sectors, or in this case, bank accounts or savings accounts. Now, it's very obvious here, and to be honest, I wasn't actually that concerned at the time, but it's kind of alarming now that, for example, in emergency fund, we only have 0.1%, which is quite funny, I guess. But again, overall, we can see the main ones here is the mortgage/house. We have nearly 57 or 57.5% of our overall savings ready for that, so we probably won't even need all that at all. Now, obviously, the more you pay up front for a house, the better, because you'd have to pay less over your 35-year mortgage or so. So we might even leave all that capital here because, again, as I said, the more you have, the less you need to take a loan of from the banks. We then have about 10% in our wedding fund. Again, that's probably about accurate. That's where we need to be, thereabouts. We only have 0.5% in house fittings, which again, just like emergency funds, really needs to start bumping up here as well. And we have about 10.6% in investing at the moment between the two of us in different trading accounts. Now, on this channel, we go through my trading 2 and 2 account. But again, my partner also has some investing accounts as well that we don't really look into. And again, because they're not my own personal accounts, I don't really talk about them too much on this channel. And then again, we have 21% here as well in non-stock investing. So again, I wanted to keep that for another video down the line. Maybe next week we'll make a video on that. I suppose then, if I had to give 3 pieces of advice here, now again, I'm not a financial advisor, but this is just what I found helped me, was firstly, set out goals and map it out. So from point A to point B. So point A is where you're beginning to or save or invest, or whichever way you want to save or invest. And plan B then, or point B, is where your final destination is. So then just map out how we're going to get there from point A to point B. And the second point middles in with the first one here in the point of being realistic. Now, for example, if you got paid, I don't know, let's say €5,000 a month, you're not going to save 4,900 that a month. It's completely unrealistic. You need to kind of be somewhat realistic and kind of live as well as such. You can't save all of your money either. You need to live, and you need to be realistic in terms of how much you're putting away. So for example, if you earn, let's say, €5,000 a month, like if you could even put away 40% of that, or 2,000 of that, or maybe even 50% out of an awful push, like that's more than enough. You don't need to completely break your back, because if you are way too strict as well, you won't actually keep to it. It's just like a diet, I guess, that you need to kind of have some bit of leeway as well, because if it's too strict, you won't stick to it. Like for example, when we started saving about 3 years ago at this stage, well, when we really started properly kind of putting importance on saving and investing, there was no way I thought we'd get this far as such. But again, over the weeks and months over the last few years, you'd be surprised how much actually comes together, even just by saving or investing small amounts. So again, you need to be kind of realistic here as well. You won't be able to fund a mortgage after 2 months of saving. It does take at least about a year or so. And again, you need to have a track record of savings as well for banks to give you approval. Now, and that kind of the third point there as well, it's just to be organized. Now, I showed you a very rough idea of my own Excels that I use. Now, obviously, I kind of dumbed it down a bit and put it into percentage form, so to take out some personal information. But again, even having something as simple as a Google Sheets Excel sheet to keep track of your savings, all of your sub accounts. So you saw there I have about 7 or 8 different accounts overall. So to keep track of all of them, just have a brief Excel really does help. And it kind of shows where you're over or underweight in terms of savings, and where you could put more capital if you have some left over, And another thing as well that I can make a video on down the line is how much you're actually spending on your own personal needs. For example, if you're getting takeaways every night, you could really start cutting that down and putting some of that capital or savings into more important things such as a house or wedding. So again, being organized, being realistic, and setting goals are my three main kind of tips or tricks here. With all that being said, that's pretty much the end of today's video. I just wanted to go through how I save or budget on a monthly basis and what I'm actually saving for. Now we can see on screen here what percentages I allocate to different funds or accounts on a monthly basis. I'll be very interested to know in the comment section below what percentage you allocate to certain savings accounts and what you're actually saving for. Thanks very much, enjoy the rest of your Thursday, and I will see y'all in tomorrow's video.